Compensation tends to be another one, as David mentioned, that can be a real hot button. But there are experts you can find. They're not going to own a large piece of the company, but they're going to do a really good job of managing those things. That minimizes risk for the business so that then the rest of the board, which are the large shareholders, can really use their influence and strategic understanding of the business to build huge equity value. When those things come together, you have great outcomes. But I really agree with you. If you stack the board, and we've had this issue, public boards in America got perverted over the last few decades to being these little badges of status that people would collect. And now, we're starting to see a real pushback on what's called overboarding, right? Where these distinguished folks will pick up 5, 6, 7 boards. All of a sudden, that's the fastest way to make $3, $4, $5, $6 million a year. How can you sit on 5 or 6 public company boards? It's impossible and add any value.
Exactly. And
Let me ask you a question.
Do you think those people get appointed to boards by standing up to the CEO?
Right. No, the opposite. 100%
They're there to
right.
be a safe vote for the CEO.
So let me ask you guys a question. What do you think is the right thing to do as companies that go public mature and their ownership base disperses? So, in Europe and Asia, many companies go public. Families own them for a very long period of time, as you guys know. They remain significant owners. They don't sell off the shares. In the US, traditionally, as companies have gone public, the shares, the founders, the original investors, because we have a lot of venture capital in this country, historically compared to other countries. So those owners end up selling off their shares and they get dispersed, and a long tail of owners end up owning the bulk of the shares. How do you think those companies can be best represented on the board, given that there isn't concentrated ownership in public companies, generally mature public companies in the US, like Twitter? The largest, owner is Vanguard with 5 million other investments. And then Jack Dorsey, he only owns 2%. What do you guys think is the right thing how do you create good alignment with board members that could be better, placed and better suited here?
Well, I think one of the ways that you do it is that when somebody wants to step up and acquire a concentrated position because they have a plan for the company, you don't stand in the way and completely thwart that.
Your job isn't to assess their plan, because your job is to assess the dollars you're getting paid today for your shareholders. And then whatever they're going to do with it, it's their thing. But are you getting a fair price is it?
Elon is willing to put massive skin in the game in order to basically fix this company and get the best value.
We all agree, but that's not about the shareholders, Sacks. Like, I agree with you. I think Elon should own and run Twitter.
Well, but let's evaluate. Let's evaluate this poison pill for a second. Okay, so Elon comes in, he starts buying up the stock. The premium he's proposing is something like a 50% premium from when he started accumulating. And
54%.
54% is like a 38%.
But a 40% discount
from the time he basically made the offer. And by the way, the stock is going right back to that previous level if they turn down this proposal. Okay. So he's made them a good offer. Okay. Now, I think it'd be acceptable for the board to say, okay, this offer is attractive, but we need to shop this. We're going to run a process and we're going to see who else is out there. And if there's nobody better, then why wouldn't we take this?
There's one thing that's left over that you didn't mention. The thing that's left over, you're right. They absolutely have a responsibility to shop it and find the best price. But what's left over is their judgment that the company's stock price will get above that level. They have the ability and the right to do that, and the responsibility to do that as a board. This happens all the time.
The problem is
the board can look at the deal and they can say, you know what? We believe that this business in the future is going to be worth a lot more than what we're being offered for cash today.
So they have some inside information. Yeah, go ahead, Chamath.
The problem with that argument is that this is what activist firms use all the time in reverse. The inverse of the argument is more powerful. You've been a director with purview into all these confidential plans that has effectively caused this company to tread water for 5 years. Why should we believe you now? Mm-hmm. And that argument is way more credible than actually you can really trust us this time. Because if you look at the tenure of all these folks, the last sea change that happened on the Twitter board was when Elliott pushed to add, I think, 2 or 3 directors.
Yeah.
But in the absence of that, I think David is largely right. These are status games. And when status games ultimately play out over years, they either play out in the stock price one way or the other. And in this case, what's true is that this is a languishing stock that has largely been going sideways, independent of anything that's been happening.
And what about the fact, Chamath, that less than 90 days ago, it was trading at $70